Sara, give us your take in terms of what this means, why perhaps we didn't find out or know about it until the Wall Street Journal reported it as well as a key part of the story.
Well, good morning, David. Being on maternity leave today was just too much for me. So I started with the earnings call from the company this morning. And interestingly, they opened the call with the classic Kevin Plank and now Patrick Frisk, incoming CEO, pep talk on how they're reigniting the brand. And then they went on to talk about the CEO transition that they announced less than 2 weeks ago and ended the opening statements with a statement from the CFO, David Bergman, on this accounting probe, which was first disclosed by the Wall Street Journal yesterday, even though, as you say, it's been going on for about 2.5 years. Bergman said that they have begun responding to questions from the DOJ and the SEC starting July 2017, so confirming that report. He said the company is fully cooperating, and he says that the company believes their accounting practices were appropriate. And that's it. They were asked subsequently by an analyst to give a little more details on what took so long to disclose this and whether it was a distraction for executives, and what the answer was from the company was no details. We cannot discuss it. So there are some serious questions for Under Armour right now and for investors right now about what took so long to disclose it, the size and scope, how many resources are being dedicated to this, and then, of course, sort of elephant in the room, which has not been addressed by the company, is this why, but obviously many people are speculating on it, is this why Kevin Plank decided to resign as CEO after 23 years of leading this company, after founding this company? The company has framed that decision as part of the long-term succession planning issue, but of course, the timing can hardly be ignored. This was announced less than 2 weeks ago. It also, guys, I wanted to contextualize it for you a little bit because it's been a tough run of headlines for CEO Kevin Plank and for the company over the last few years. This is just sort of icing on the cake and the latest negative curveball for investors. I'll just go through a few of them for you. The company's had 3 CFOs since 2016. After several years of very fast growth, the company basically hit a wall a few years ago. Sales began to slow. The company reported a fiscal year net loss, and there have been some serious questions internally and externally about operations. Everything from a Me Too male-dominant culture inside this company to whether they're executing in North America, which represents 70% of sales and is no longer growing.
You know, Sara, you go back, of course, you're talking about their growth issues, and it does go back to this period in question, doesn't it, in terms of whether or not they accounted for sales appropriately, I guess, in terms of the given period that they took place.
Right. That's the core, as we understand it, of what the DOJ and SEC are looking into. And if you look at the heyday for Under Armour, David, this is a company that reported 26 straight quarters with more than 20% sales growth. And the company really became obsessed with talking about this point, whether it was talking to CEO Kevin Plank in numerous interviews that he did with me and with CNBC over the years, and you saw it in the stock price, and it was always given a premium valuation. Since 2016, really 2017, and the growth halt, there have been questions about a founder-led executive structure. Remember back in April 2016 when the company issued a new class of shares, which cemented Kevin Plank's control over the company, even though he was selling off shares? That's really when the problems started to develop. So in the last few years, it's unclear because they have been reporting losses and the growth has slowed down. But before that, it was a moonshot when it came to explosive growth during the early years of the company. And that's likely, though I have no confirmation of that, David, what the federal investigators are looking into.
Yeah. And finally, Sara, what about the current quarter in terms of the actual performance right now? How did it look?
So it was actually better than expected on a number of metrics. Among them, better margins as well, and the outlook was better. In fact, the company said that because of the better margins and the fact that they are in the middle of this multi-year transformation, they're going to allocate more spending toward marketing and try to reignite the brand. However, sales are still flat, and sales in North America are still flat. They were a little better than expected, but they're still not growing. Also, footwear, which was their big bet, Steph Curry, their athlete, the Curry shoes, I mean, that declined 12% in the quarter. So this company still has a long way to go to turn around sales, and many of the skeptical analysts on the street are wondering how much shelf space they've actually left, because their problems are coming at a time where Nike is killing it right now. They're growing market share. They have a hot innovation streak. And so there are questions about how Under Armour can turn it around. Under Armour's been decreasing its off-price channel because they're trying to boost margins, so they're trying to get better prices for some of their products. They've been trying to focus on direct-to-consumer, which is where all the growth is in the industry, but so far, no growth, despite the fact that under Patrick Frisk, who was and currently as COO, incoming CEO, they've been taking more discipline, as the company says, and really trying to expand the profitability. But I don't want to underestimate the questions right now, not just around this probe, but around leadership of this company, the culture of this company, the executive departures, the string of bad headlines, and just how they're going to recover from this and grow sales and reignite this brand under the weight of some of these really deep problems that are going on.